to populate everything. Give it a minute here. Did you close out all your positions this morning?
Yeah, indeed I did.
How did the day go? Was it all right?
Yeah, day was good. Day was really good. Sorry, man. Just looking at this thing right here. Yeah, day was really good.
So the live is up. Jordan, if you want to hop over to it.
Yeah, let's do it.
Okay, I'm going to close out of this actually. Okay, what's going on, everyone? All right, today we're going to do it a little differently. We're just going to hop through a bunch of trades. So unless someone actually has a particular trade that they want us to look at, we're just going to quickly go through them. Give me 1 second here. I'm going to, and my computer is not going fast here, but it's okay.
Are you on the, are you on the tool?
I'm on the tool, but I have a few things open here. I just need to copy this. Just drop it on our stock twits quick. That we're live. Done.
Okay, let me hop over to the live right now.
Okay. So today I'm just going to fly through a bunch of trades. We're going to look at earnings and non-earnings trades today. So the way that we usually do this, I'm going to show you how we do it from just our tool. So one of the amazing things here is I don't actually need to look on StockTwits to find good trades. I can use just our tool, use the scanner, which is this up here, and I can actually just hop right in and find trades right out of here. To be honest, I rarely ever look at charts. This is pretty much all I need. There's no edge in just seeing the chart unless I just want to know what's happening with the price, but it's not the hugest edge in the world for me. So let's have a look here. If I wanted to have a look at, let's say where is it vol versus Jordan? IV versus forecast.
Yeah, you can go right there.
So if I wanted to see things that have a relatively high implied volatility versus the forecast, I just sort it so that the highest ones are coming up the top here. And, these ones are really high. I bet you there's actually something happening with these ones, Jordan. They have an IV versus forecast of 4.
Wow.
So
the thing is though, thing with BMY, the data was a little funky there. So something I like to do, I like to scan for by average option volume as well, just to look for things that are only liquid.
So I would move this up to maybe half.
No. So that's super liquid. So you all you have to do is type in the top there. Let's say if you increase it a little bit, and then you know what, Sean? Don't worry about that for now.
Okay.
I have to show you how.
So let's move on. Let's just look at some trades here. I'm gonna go to page 2. Let's see what we got. So ACB. Let's look at ACB. What's going on here? So ACB is one of these stocks that I actually traded back in the day a lot, and the implied volatility is always extremely high for this thing, and it never actually seems to move that quickly. So something crazy about this is let's look at this. If we break it down by just volatility and how it moves together in the past, look at this. It's usually pretty close together, right? And in the last little bit, we've had this breakaway. And then check this out. If we zoom in right here, we've had this split. The last little bit, we've had this little split here. And what does this tell us? What this tells us is that the implied volatility has rapidly increased, and we've actually had a slight decrease in the realized volatility. So what does this mean for us? It means that the market thinks that there's going to be a massive move. If you wanted to break it down day by day, you just divide it by 16. So we're looking at literally a over 10% move a day, like a 12% move a day is what the market thinks is going to happen. And we're thinking it's going to be like an 8% move a day. So what does this tell us? This tells us that the options are extremely expensive. And this is actually set up really well for us, Jordan. Look at this. We could sell an iron condor here.
Yeah, because the at the money is so expensive.
At the money is so expensive, and then the wings are so cheap.
Exactly.
Right? So we could sell these, collect a huge premium for selling these. Not like we would collect the 196, but at the wings, we're only implying a much smaller move. So we would actually be interested in selling an iron condor here. Sorry,
exactly.
Guys, I had that kind of on a small thing there. Hopefully that makes things a little bit clearer for you. But this is actually a really good trade. If you have any directional bias on this, you actually don't even need to use it here, but you can just shift the center of your butterfly a bit, have a directional fly on.
Yep.
But like, guys, this is actually a really good opportunity here, because not only is implied volatility extremely high, it's not that high at the wings. It's like way lower at the wings. Jordan, do you actually know why it might be this? It's implying 0.
I know. There's something going on with our actually data provider right now. Some of the data coming in is not good right now. He's having an
Okay,
issue
we'll have
this
to look
morning.
into that.
Yeah.
Okay, so let's look at a couple of other things for ACB before we move on. Relative call put ratio, 7 out of 10. So relative to what typically happens here, there is more calls being bought than puts. So people are more interested in the upside than the downside. And if you look at the curviness of it, really high as well. And the skew is actually low relative to what it normally is, which is really interesting for us. Normally you would see like a massive skew on a stock like this, especially, but today it's really low. So that's super interesting. It means it just once again tells us that the call side is seriously, outweighing the put side in terms of the demand for them.
Yeah.
So, if I'd recommend taking a look, because we might be having a little bit of trouble with the data for this stock in terms of the skew. But if this ends up being true, you can look at the option chain to see what's going on here. I would sell a butterfly here, right? The implied vol is just so much higher than what's likely to happen given our forecast. It's clear.
Clear as mud. Perfect.
Jordan, can you have a look, see if anyone wants to look at anything in particular?
Yeah, I'm not seeing anything here, dude.
It's CRBP. And Jordan, if you have your screen open there, just do a quick Google search of these companies to make sure that what I'm seeing here, like the stocks that I'm looking at, there's no funky things happening with them that might be causing some issues for us. Let's have a look here. So I'm gonna look at a couple of earnings trades right now. So we're in the middle of earnings seasons here, right? Right, guys. So there is a ton of earnings trades on that we should be taking a look at. Jordan, what's going on with the earnings date here?
So yeah, you have to type in there. So it's like 2020 0428 or 29, whatever it is, whatever date it is today. Yeah, and then just click it there, and then you can go after hours. So see where it says time of day. You go 1630, and now we're looking at everything tonight.
Let me see here. Is it as the 29th? Okay. So there's no comments from anyone, Jordan?
Not yet. Nope.
Okay. Guys, if you have any questions, if you want to look at any stocks in particular, let me know. So let's break down a few of these. So these are, like, a great thing about the scanner is these are all the stocks that are having earnings after hours today, right? We have so many of them that it's unbelievable. So if you have something you're looking at, let me know. I can hop to it. There's a ton of stuff going on.
So Warren is actually looking for MYOK, MYOK.
Okay, I'm going to go through a couple and then I'll hop right into that.
Yeah.
Is that an earnings play or is it a regular volatility trade?
Is that an earnings or volatility trade?
So let's look at AGI here. Jordan, we're getting implied moves of 0 for everyone.
Yeah. Our data provider is, I guess he's down this morning. First time it's happening.
Wow, that's insane.
Yeah.
Okay. Well, what should we do here?
We can look at historically, like how have they performed?
Okay.
Just until he updates us.
So sorry about that, guys. So the data provider updates, really frequently, but this is actually the first time this has happened. So I'm not sure, but it's not a big deal. It's unfortunate timing, but we'll make do with what we got here. So let's look historically at the earnings. What we're always looking for when it comes to earnings is what is the market implying the move to be versus what is likely to actually happen around the event. So what we typically do, this earnings implied number here, we isolate the earnings event volatility, and it lets us price how much an option is worth if we're trying to just trade around the earnings event. That gives us insight into how much move there's going to be. We create our own forecast. We look at the average move. This tells us right here if the earnings event is confirmed or not, which is, it can be very valuable for specific types of plays and knowing what to look at. And then typically we would start by comparing these numbers, and then we'd come down here and look at the historical information about it. So these 4 graphs right here tell us pretty much everything we need to know historically about a stock. So we start with this, right? The earnings moves. What this does is it compares 2 things. One, the average, the number, like what actually happened over the last 12 events. How has this thing moved, right? Right here is 0, 0 is the center line. So like, 3 years ago, it moved down 8%. The year after that, it moved up 2.6 and so on. And then we can actually compare it to what the market was implying for each of those events. So not only do we go and strip out the event volatility for today's event or tonight's event, we actually go historically and do that for the last 3 years of events. The really cool thing about this is we can go, okay, like how often does the market get it right? How often does the market get it wrong? What's happened historically? Like how has it performed? And this is what we can see here. So what we can see is that on average, the market overstates it, but when the market gets it wrong, it looks like the market gets it really wrong, right? So like, up 4, down 6, right? So that's like, if we were playing volatility, that'd be a $2 mistake. And that's pretty pricey. We would be like collecting $4 in premium, and then we'd be paying out $6 in premium. So, we want to check this, and then we go, okay, we have a general idea of what this looks like historically. Let's look at the P&L historically if we were to be just buying volatility. So this would be, how would we have done at each of the earnings events if we bought a straddle? And what you see here is it's been bad, right? It's not been the end of the world bad, right? Over 12 trades, you're actually only down 19.2%. So it's not like you blew up. Like some of the trades we'll look at today, I'm sure this would be down 80% right now. Right? It can, the trading earnings, if you don't know what you're looking for, can destroy your account. And these graphs are really a prime example of that. But what I see here is, the market does get it right sometimes. This does incline us towards selling volatility more than buying it. And depending on what the market is implying the move to be here, you have to make a decision as to whether or not you think there's going to be a big move. So let's see, what's something else we can look at? Let's look at the seasonal plots here.
Yeah.
So this tells us month to month or by quarter, when do they have their big moves? And this is really interesting. They actually have their big moves in Q2. So if there were going to be a big move historically, now would be the time. So this is something important to take into our consideration here. What if history repeats itself a bit here? This is when we get our biggest move. So if the difference between the average and implied moves is not massive, we would probably actually avoid this trade, or maybe actually even buy straddles around this trade. We're going to get big moves in this season. When the market gets it wrong, it's very profitable. And the historical P&L, yeah, sure, it's negative, but we get these really big upticks whenever we actually are right. So that's a breakdown of this. If you had a directional bias, this chart becomes very useful. This distribution chart here. What this basically tells us is historically what have the distribution of moves been, right? So what we can see here is if there were going to be a massive move, it's usually to the downside. We're talking 10% moves, 8 to 10% moves. It's the downside, right? The biggest move it has to the upside is like 5%. So we want to keep that in mind, right? If we think this thing's going up, the odds of it having a massive move up more than what the implied volatility is probably pretty low, seeing as it doesn't actually do that. If there is a big move, it's to the downside. So we want to keep that in mind when we're looking at these trades. So if you want to be betting directionally, I would say you would want to be betting towards the downside on this.
Yeah.
Okay. If there's no questions about that one, what was the one Warren wanted me to look at?
MYOK.
MYOK. Is it an earnings trade?
No.
Okay, Warren, the data is updating right now, so it's not going to be perfect, but let's take a look at it. Right, so you see we're having a bit of trouble with the skew down here. It's not perfect information right now. Hoping that'll update soon. Jordan, you think these IV and RV numbers are okay?
Yeah, they look okay.
Okay, so this is wild, Warren. I don't know how you found this thing, but Jordan, can you hop on? Let me hop on StockTwits quick because this is actually crazy. I need to know what's going on here. If we look, the implied volatility is 215 and the realized volatility is 124. Literally almost double the volatility, right? So if we strip out a couple of these and just look at the short-term volatility, look at this. This is like, what the hell am I looking at here? Look at this difference. Over the last month, all that's happened is the market keeps thinking that this thing is going to be more and more volatile. and it's becoming less and less volatile. This is actually looking like a golden egg right now. Let's have a look.
Yeah, what's going on there?
Yeah, MYOK. Sentiment, it's got it. What? Everyone thinks this thing's going to the dirt?
Yeah, but look, there's not a lot of people watching this thing. I'd be cautious here, man.
Mm-hmm.
I don't know what's driving the implied vol. Look, there's only 1,000 watchers.
There's only 1,000 watchers. Let's look at what this company actually is. Okay, so it's some sort of medicine company.
Yeah.
News. Traders betting on a big move. Interesting. Yeah, you know what? I was hoping to see more people on StockTwits looking at this thing, because then we would have been like all over it right away. But since we don't have that, and we're seeing such high volatility, we're seeing implied actually getting higher, meaning more people are buying up the options, even if the RV is staying low. We should be a little careful, right? Relative, and this is also another thing, right? Relative action is standard. It's actually not that high. So Jordan, what do you think about that actually? Right? There was a point in time where a lot of retail were looking at it. Action hasn't really changed.
I wouldn't be selling vol here.
No, too risky.
It's too risky. We don't know why this is. It could be a merger. It could be, who knows what it could be. But there's a reason for it. People aren't stupid. They're not going to just give you free money here. So you can get in big trouble. You can get in big trouble selling vol here. Be careful.
Wow, exciting. Good thing we checked it, right? And this is the thing, right? Data is a building block of all these strategies, right? You need to have it, right? If you don't have it, you're literally at a direct disadvantage to everybody else playing in this space. But at the same time, it's not the end all be all. So you use it in combination with research and intuition to make better trades. On its own, it's great, but you run into situations like this, right? If I was just running data, if I was running like an algorithm that took this and just traded the spread, and it happens to be that there's a merger or something coming, I could get screwed. Right? Look at this. No retail like this thing. Right? No retail are liking this thing at all. Right? But look at this. Heavy options volume, right? We're seeing massive volume in here. So what the hell is going on? Right? Mm-hmm. So Warren, if you do really want to look at this, you got to understand thoroughly what the hell's happening with this stock, because as it currently looks to me, it's like there's something happening behind the scenes that we don't know about. So Warren, leave a comment in the box if you know what's going on with this, and we'll come back to it. But if not, I'm going to move on for now. I'm actually going to go back to did Canopy Growth have their earnings, or is it coming up tonight?
I'm not too sure.
They had their earnings. Okay, let's see what else we got here. Guys, you have anything you want us to look at? AGI. Look at this. Okay, right? So remember how before I was saying that the historical P&L can really tell you a lot about how it's been to buy or sell volatility around a stock? This is literally prime example, right? So this is AGI. Buying volatility around AGI, you would have no account anymore. Negative 101%. Your entire account would be erased right now if you bought volatility over the last 3 years on AGN, strictly trading the earnings events. Absolutely smoked. What does this tell us? The market is always overstating volatility on this thing. Looking at this chart, they've actually never gotten it right. Let's have a look here, right? So we compare the blue. These are the moves that actually ended up happening. And then we add in the red line. These are the moves that they anticipated to happen. That was the market implied volatility versus the blue, which is the realized volatility. Look at this. Sell vol here. Sell vol here. The answer is pretty straightforward, right? I'm assuming that this implied number, it's unfortunate that it's not populating right now. Our data provider is taking a longer than usual to update, but it's okay because we don't place these trades to the end of the day anyways. Actually, you can shoot us a message. I feel bad. Shoot us a message on Instagram if there's a trade you like that we analyzed here, and I'll give you this implied number as soon as it populates. Right? So, right, average move is lower, and we are actually forecasting a pretty big move, but I guarantee you that this implied move number is going to be huge, probably like 12% or something. And the market always gets it wrong. They always overstate it. People get way too excited about this thing, or people are way too nervous about what's going to happen. And every single time, 100% of the time, they've been getting it wrong over the last 3 years. If we look at the seasonal plots, we usually get our smallest moves in Q2 actually, which is another thing in our favor. And if you had a directional bias, you get more to the upside. So depending on what this implied number is, I'd be putting it to the upside. But the majority of the time, like 60 to 70% of the time, this thing is not moving more than 5% either way. So I think it's pretty straightforward to sell vol. I would buy the wings. So I'd be a little safe. I'd buy the protection, the 2 standard deviation out wings. But I think this is a great trade right here. Jordan, what do you think?
It looks like a good trade to me. I mean, like anything that is that biased, like market biases last for a long time. Anything that's that biased, I'll be selling vol for sure.
Yeah, and remember, guys, full disclaimer: do not throw your whole account on this thing. That's like rookie mistake number 1, right? We got way too many kids on here just too excited about trading. Like throwing the whole account, hoping for a big winner here. No, we don't want to be doing that. This is a good trade. Take it, but spread your risk. Place 5 more like this today. Yeah. Don't make this more than 5% of your account. Don't try and go for the moonshot. Collect small wins all over the place. Take them, be happy with them, grow your account. Right? That's the way of a professional trader. That's the way of a profitable trader. So let's break down a few more. Jordan, we'll do a couple more here.
Let's do it.
Guys, any questions?
Let's see here. INO was another. He was looking at INO. Hans wants to know. He's looking to buy a strangle on WM over the earnings of the 6th of May. What is our opinion?
So that's a little bit far out, don't you think, Jordan? Or actually, no, it's next week.
It's next week, yeah. He's looking to buy a strangle. So let's take a look.
Okay. Which WM?
WM.
Okay, well, it's hard for us to give him a solid opinion right
yeah.
now.
We're gonna we will message you in the chat here once this updates.
Yeah, but if we look here quickly, you rarely get a big move to the upside. So like big moves are not too common here. Q2 we usually get like a not too big move, right? Q3 seems to be when this thing jumps around like crazy. If we look historically, when the market does get it right, it pays off pretty big. But on average, I would say you're in a decent. What did he want to do? Buy a strangle?
Yeah. On average, you're going to be losing here.
Yeah,
you're going to be losing here, Hans. You need to figure something out that the market's not seeing.
Exactly. So have a look at it and see what would be the surprise. Right. Yeah. A question we always have to ask when we're buying volatility is, where is the surprise coming from that the market isn't already pricing in? So for example, like if, I don't know, Ford was coming out with earnings and, they said it was going to be bad. So the market starts to think like, okay, like there's going to be a move to the downside. It starts to price in the downside move. And then the earnings come out. And not only did they have a bad earnings, but they sold off half their plants. Well, now you're going to see a huge move down. But if it comes out and they're like, yeah, just like we said, earnings are really bad. Here's the earnings. They're really bad. You're not going to get a huge move because we already knew that. Right. So just remember, the market tries to price in future information today. Right. The price of today is a forecast of what is happening in the future as well. And it's when the market gets that wrong that the price really starts to change. Right? That's when you get those big moves. So you need to think like, okay, what's the market not seeing that I'm seeing? Right. And you need to research that and test it.
Look what happened to Boeing today. It was only up like 4%, 3%. Market thought it was going to go to it was going to move 15%.
Did it only move 4, dude?
Yeah. What does it say?
Oh my God. It was like the best short ever.
Right. So we were trying to short vol on Boeing yesterday, but the market wouldn't give it to us.
Couldn't get filled?
Couldn't get filled. I tried dropping it down pretty hard in the last few minutes.
Couldn't do it, eh?
No. And same with Starbucks, right? It's like the thing.
You guys make a killing on Starbucks?
We did make a killing. People thought the stock was going to move like crazy. It didn't move at all.
Oh my God, it moved nothing.
It moved nothing. So
what was the implied volatility for this? Like 11% or something?
It was like 6%. It was pretty pricey. 6.5%. So
and it moved one.
Right. So there's so many times, guys, where the people think like, oh, this thing is moving up so much because of all this information, but in actual fact, that information's already priced in. Right? You guys are buying options. Think about it like this. Like, let's say there's some type of news, like Starbucks is going to move like crazy. What's going to happen is you're going to come in and buy up all these options. So it's going to be implied in the actual option price.
Interesting. Okay, let's look at one more here.
Yeah, then we'll call it.
Everyone loves the biopharma companies. So let's take a look at BMRN. Okay.
What is
Cool.
it?
Earnings coming up. Look at this. Jeez. Another one that would have blown up your account buying volatility. Look at this. The market always look at this, Jordan, look at this.
Yeah, but that's because bio like doesn't earnings don't really affect this company. It's more like the drug releases, but the market for some reason thinks that it still should have some volatility.
But no, the market thinks there's gonna be like Jordan for the last look at this. For the last 3 years, this thing's supposed to move 7% per event, 7 to 9% per event, and it ends up moving 1%. Right? Go do some research on this one, guys. Look at this. The distribution of moves, this thing never moves more than 4% either way.
Yeah.
Right? Yeah, Q2 is when we get the bigger moves, sure. But I'm very interested to know what the market is implying it to be. Probably 7 or 8% in line with what it's done historically because it's already been so inflated. But look at this. Imagine if your portfolio P&L looked like this. God, I'd be getting out of trading.
Yeah, I know. Hey,
So,
it's funny. So many people's portfolio do look like that.
I know, right? God, the number of people walking around claiming to be a trader, but refunding their account every 3 months.
Yeah.
Traumatizes me.
Yeah.
It's astounding. But we want it to go this way. So what can we do here? We can actually just take the opposite trade here, right? It's unfortunate I can't see the implied move, but guys, take the opposite of this. This never pays out. Right? What are the odds it's going to pay out now? What are they going to release that they have the coronavirus cure on the same day as their earnings and just absolutely kill it? Probably not. Are they going to come out and say that they're bankrupt? Probably not. These are companies that are picking up steam right now, taking on debt, growing. They're focused on growth, increasing the size of their research teams, doing all this stuff. So take the opposite. Manage your risk, 5% of your account. Take a trade here. Buy the wings just in case. Mm-hmm. I think it's a great trade.
Yep. Looks good.
Okay. So if we have no questions, I'm going to wrap it up there.
Okay.
Jordan, you seeing anything?
That looks good to me, man. Werner liked your joke about the people who claim themselves to be a trader but are refunding their account are firing new bullets every 3 months.
We can sit back after market hours, crack a beer, and laugh about it. But the sad thing is, it's actually reality as well, right? It's crazy how many people are out here trading with no idea, and it makes easy money for us, those of us that do, though. So, I guess I should thank them, actually. Okay, guys, if that's it, I'm going to wrap it up. We'll be back at it tomorrow. Every morning, we're going to do it. If you guys are new here, drop a subscribe because literally not only do we do this, I give away a ton of free education on here. There's a lot of misinformation about options trading online. Our job is to teach people basically what the hell they should be doing in this game. What are pros looking at? What's the mentality you should have in this game? What skills do you need? And how can I help you gather those skills? So drop a subscribe. Look forward to next time. Take it easy, guys.